Okay, good morning, everyone. Let me just see my everything looks okay. Yes, it does. Good. Good morning to everyone. I'm just going to move my little camera here. That's better. So good morning. We are going to be talking about the mini summer budget announcement that Rishi Sunak gave us earlier this week, but I'm also going to be introducing other factors as well. Hopefully, whilst we're saying good morning to everyone, and do say hi and how you're feeling today, do make sure you get one of these, not a Villeroy Bosch cup, but a cup of coffee or a drink of some nature. And if you have a drink as well, because we are here for the duration until 9, you got my message, right? It was 9 a.m. till 10:30 p.m. You got that, right? So hopefully you've got plenty of this, then we can get through cracking tonight. There's a lot of content, so you're going to be sitting around quite a lot. So make sure you get drinks. And also, if you get a pen handy, or if you've got a scribe like an iPad, get those ready as well as we go through today's session. Do say hello. I will have my chat box open at the same time. So I'm just trying to see where my chat box is now gone. I can see it here. So hola, Danko. So I can see if I can just type back, and that'd be a fantastic use of technology. So I might be peering down from time to time, and that's because I am live. I'm vigilantly looking at all the comments you're making. So make sure that you do type in your questions as we go through today's session. Now, let's make a start by saying good morning. So anyway, I'm Simon Misiewicz. I'm your host for today. I'm your property tax specialist, and I'm here to help you save money on your tax liability, but also to create more wealth for you as well. My focus in the past has been just about tax, but actually, there's no point paying little amounts of tax if you're making little amount of money. So my focus is going to be shifting somewhat in the near future, talking about how you create more wealth for yourself. Do comment in the comments box below if you think that would be useful for you, rather than just talking about tax. I will be talking about property tax today, not just the Rishi Sunak's recent budget announcements, but I will also be talking about all the other introduction announcements throughout COVID-19. So I will be talking about those as well. As we go through today's session, I will be showing you this, and that's because I want you to press the like button, and I will remind you until I'm dead. So ultimately, I want you to press the like button if you find this useful. Don't press like just because I'm telling you to. Only press it when you think it's useful. It's like one of those quiz show hosts. It's where the person gets dunked in the water. It's one of those, but in a positive sense. Don't forget to subscribe to this channel if you haven't done so already, because I want to be releasing videos now, maybe 3 or 4 videos per week to help you guys along. And of course, drop any comments throughout this session, and I will be more than happy to provide answers as I can during a Saturday morning. So what is the agenda? Well, the agenda for today is going to be pretty nice and straightforward today. It's not ram-packed with lots of detail. I wanted to do it on a Saturday high-level approach, and hopefully I've achieved that. So what we will do is doing the welcome. So we say hi to one another. So make sure that you do say hi. Hopefully you can see each other on the chat box as well. So if you do know someone, say hi. If you can use the at sound, at symbol, something like that. I don't know, but use one of those thingy-majigs in the comments box below, and then it will reach out to that person as well. So if you do know them, say hi. So we'll do that. Next subject, we'll be talking about tax help. By the way, I did put the question mark as an icon. That's not to say that I wasn't sure what help they're giving, or if the help they're giving is actually not very good and questionable. It was just because I didn't find any other icons. Stamp duty land tax as well. There's been a number of changes for stamp duty land tax, and I'm so pleased about the recent announcement, and I will go into detail about that as well. My icon has now stopped working. Here we are. I'll also talk briefly. That's not me wearing underpants. I wear boxer shorts just for you. But green home grants I can't talk about it extensively because they haven't really announced too much, but I will tell you what I know and on the research I've been doing. I'll also give you the pros and cons of using the bounce back loans, and then we'll do some open Q&A as well. I want you to help me shape this channel going forwards, and I'm really excited about the things that we're starting to do going forwards, and really I want to be able to help you even more than I've done before. So that's the agenda. So we may as well get cracking. The time is now, I don't know what the time is now. It's 9:05, so 9:05 it is. So everyone say good morning, ready to rock and roll. So hi Alex, hi, who are you? I've still not sent my message to Danko even yet, so not sure what's happened there. So there we go. I'm hoping that's worked. And let me just check out hi, and I'll just type in Alex and let's see if this one works. I have to press there's an icon on my new software which I've not seen before, and it's a little bit different. So yeah, that's a bit difficult, isn't it? So Alex, actually it's going to be 10:30 tonight, not 9:30, so 10:30, so that extra hour would be really appreciated. Okay, so let's go into the session. So tax consideration after my slurp. I was actually going to do a slurp, but I thought that would be proper rude, so I avoided that. Tax considerations when we're in the buy-to-let game. The first one that we all should be aware of is stamp duty land tax. So that's the tax that you pay when you buy a property. I have to say, guys, there's a number of mistakes now coming from conveyancing solicitors who proclaim to be experts in the field. They're not. They are making silly mistakes, and that's because they just don't want to keep on top of legislation. They see it as a push through to their administrators. You use the standard, a generic SDLT calculator on the HMRC website and you'll be okay. Well, unfortunately, there are so many deductions, if you like, from stamp duty land tax that solicitors aren't doing. Do make sure you check out the calculations that they're doing. A lot of investors out there are just saying, well, they're a legal representative. They should be looking out for my best interest, bearing in mind clients' approach to business. Well, not always. You do need to check it out. Conveyancing has come very much as transactional side of things. I think a lot of businesses are, because we're going for a low cost item, and we have to be a bit careful with looking at cost versus quality of service. So do be careful. VAT, when you're refurbishing a property, there are times when VAT is 20%, and as we'll see later on, that VAT can be reduced to 5%, and we're going to see an example of that. But we've got other kind of things that we might be looking out for as well. 0% for property developments and strategies. So you do, again, need to be careful not to assume that 20% VAT applies to everything you do. You could be forking out 15% more in terms of cost than you really need to. So do be in mind in that as well. Income tax, whether that's income tax for the company, so corporation tax, or indeed income tax in your own name, people again are paying too much tax because they don't know what they can offset against their particular property portfolio. So that's something for you to bear in mind as well. Capital gains tax, so if you're looking to sell your property, then you will incur CGT as well. There are ways of not paying CGT at all, similar to IHT, interesting enough, where you don't have to pay it. It's optional. Do you want to pay it? Yes, well, I'll pay my CGT. Or no, you won't. So you don't have to pay those liabilities at all. There are ways of getting out of it. For one, we're building calculator tools, which we will be selling online. We know that not everyone wants to be paying out to a property tax specialist, a popular tax specialist, whatever the one knows is. So a property tax specialist may be more than you want to be paying out for. I get that, and that's why I'm shifting the configuration of this channel to provide support to everyone. So it's an all-inclusive service. So we're starting to now sell templates to help you out, due diligence templates. We'll start to do developing those. And indeed, we're going to be writing our own book as well. So Louise and I will be writing our property tax book, which we'll release each year, which would hopefully make it more affordable for everyone. So that's something we're doing. And obviously, we are doing tax consultations as well. So it does give you some options. Now, I'm going to ask you a question because I'm interested in you. So what I would like you to do is be active throughout today, if that's okay. And I've got a prod stick. So if I do see you sneaking off, I will reach out through your laptop screen or your PC screen and give you a bit of a prod with my prodder stick. Hello, I'm here. So if you could answer the questions, that'd be fantastic. What I'm going to do is start my first question. So let's go for the first question, which is property strategy. So let's have a look at this. So this is the strategy that you're going to be focusing on. You've got different options. Single lets, is that something you want to do? Less noise? Maybe not the best return investment, but it's less noise. HMOs. Oh, I've just realized something. You won't be able to see this poll, so that works backwards. So if you could just do me a favor, type it in, that'd be a lot better. So type in your chosen strategy. So single lets, HMOs, commercial to residential, commercial only, and holiday lets. Just type in your questions on there because that would help me understand where you're going. Single lets are fantastic because I do think they are useful for very little noise. You can give it to an estate agent and hopefully a 2-3 bedroom house will give you decent enough return investment. HMOs are fantastic if you want to generate even more return investment, but I do think there's a playoff between time. You will find that letting agents aren't so great with HMOs and you might have to do some more involvement of your time. So there is a trade-off between money and time. Commercial to residential, huge thing going on. And I'll talk a little bit about that later on. And then commercial only, if you're into office blocks, who would be in that game right now? What about shops? We obviously know that some shops are being closed down, business closed down, but we may see a resurgence on that. And holiday lets, is that something you're into? So let me have a look at what you've been typing in. And I can see that single lets only is still popular, and I can understand that, to be fair. HMOs sticking out there. Hotels, wow, Danko with hotels, that's really interesting. Maybe if you've got some time, Danko, just give us some idea of what you're doing with hotels, why you got into hotels. That'd be interesting. And if we can look at anyone else who's saying, so mainly I think single lets to HMOs seems to be quite a popular choice right now. That's good to see. The property trends I'm thinking of seeing in the future and what's been in the media a lot more seems to be single lets. Obviously that's not going to go away, but what the trends are going to be is holiday lets, because holiday lets, there's going to be less people going out at different countries. They might be frightened about planes and getting on a plane. They may not have as much money, therefore going into a holiday let in the UK might be better for them. There's no Section 24 issues, are there? Because, well, it doesn't affect that kind of property. And you get CGT rollover. So if you sell a property, you don't need to pay CGT. Did you know that? Did you? Did you? But if you didn't, fine, because we're going to go into it. Hey, commercial to residential. So one person talk about commercial to residential on there. Great VAT reduction rates from 20% down to 5%, down to 0%. There's lower SDLT banded rates. There's no 3% SDLT higher rates either. So commercial to residential proving very, very popular. And I think it will be even more popular when office blocks really do start becoming empty. That is a strong forecast many are making. So there's going to be a lot of good deals on office blocks. And if you want to know about office blocks, speak to Jim Halliburton, who bought an office block on an option for £1. Yes, £1. Unbelievable. The guy's a genius. So, you know, you could follow that. So that was in Wolverhampton, funny enough, and he does his education seminars there as well now. Great units, I have to say. And then HMOs, bed sits, I do think they are going to be popular going forward. We are going to be facing some sort of financial crisis, recession, downturn, call it what you like. But we are going to find that people can't afford to live on their own anymore in a house, so a HMO might have to do. Separation, we are going to see people splitting up. You know, divorce rates are going up already because people have been COVID, they've been locked together, things have been said, not nice, right? So those are my property trends. Any of your thoughts as we go through today? Is it something you would expect to see? Do you see any other property trends in the future I have not already mentioned? Please do put a comments box below there. GoPal's just joined us to say he's looking at HMOs as well. So interesting aspects that I think is going to go forward. Let's talk about HMRC now and the support that they will give to you during this time. And one thing you should have noticed is that if you had a VAT payment from the 26th of March to the 30th of June, you should have cancelled your direct debit. A bit late now, isn't it? Because we're in July. But it is a help that HMRC gave to us. I think we should acknowledge that. The VAT deferment that you can see the dates there, you would have to make that payment though by the 31st of March 2021. So make sure you do budget for that, because what I don't want to see is for the people that are VAT registered businesses to go all the way through to March next year and then have 2 VAT bills, which puts you out of business. So you do need to be very, very careful with that in mind. Income tax, now there is a second payment on account. Typically you make your first payment account on the 31st of January. So that's the time you actually pay your tax bill, but then you pay your first installment for the next tax year because they want it in advance. Well, normally there is a second payment account on the 31st of July. That's not going to take place. They are deferring that request for payment on the 2nd to the 31st of January 2021. So again, a nice little help, if you don't mind me saying, from HMRC to make sure that we all stay afloat. So if you haven't cancelled your direct debit for your payments on account, make sure you do that as well. Don't make your second payment account 31st January, defer it till the 31st January next year. And we can also talk about delay of all tax payments. So if you've got corporation tax, I've just paid mine, interesting enough. I could have delayed it. There was an option for me to reach out to HMRC and say, can I pay my corporation tax and liability over a period of time? It's something that I would recommend you doing if you're finding yourself in a little financial pickle. Reach out to them. It's always a good time. Don't get your agent, your tax agent or your accountant to do it for you. Reach out to them yourself, because they're going to want to know why you are in this situation that you're asking for deferment, and you can agree on the phone a payment plan. Now, they may not give you the answer straight away, but you do want to be starting these kind of conversations sooner rather than later. Don't be an ostrich burying your head and then bang, something kicks you up at the bottom and you fall over. Can you visualize that? Hopefully you can, because I did, and it's pretty dark. Okay, let's talk about stamp duty, land tax, and the holiday payment that they talked about, where they are discounting stamp duty, land tax. By the way, I will below this video link, if you like, after the session's been done, it's all been processed. Please do come back to this, because I will be dropping in links to this video, which I think you will find useful. The first one is this particular website from HMRC, talk about stamp duty, land tax, temporary reduced rates, which describes everything I'm going to talk you through. So it does talk a bit more detail, but as you can see, hopefully on the screen, I'm just going to use my newfangled pen highlighter here. It does kick off from the 8th of July, which was a couple of days ago, and it goes all the way through to March 2021. So if you're wondering when does it start, when does it end, then you are. There's your answer. So what does this reduction benefit you from? Well, you now pay 0% stamp duty, land tax as a rate on the first £500,000 on a property purchase. So 0% SDLT on the first £500,000. over and above that, you go through the normal banded rates. That's not going to change too much. But the first £500,000, no SDLT. And interestingly enough, when I listened to Rishi Sunak's announcement, he said home about 5 times, and main home, I should say. Now, to me, that if you're describing a main home, that means your own home and nothing else. But then in the literature, in the website I've just shown you, right at the bottom, it does talk about landlords and being able to buy them in a limited company, and the fact that you will pay this 3% SDLT surcharge. So even as a landlord, irrespective if you buy the property in your own name or indeed a limited company, you will pay this 0% SDLT rate. That's fantastic. That is really more out the box thinking. But it also tells me that Rishi may not be a fan of George Osborne, because he's clearly not trying to alienate buy-to-let investors. He's saying, well, actually, no, we need to boost the economy and therefore give that discount to everyone, including a limited company. So he's not reversed the 3% SDLT high rates, and you'll see why I think that's going to be prevalent later on. But the fact that the 3% SDLT rates do still apply, if you're buying a £200,000 property, you will still need to apply that 3% SDLT rate. Now, this gives us an opportunity, because anyone that's a high direct taxpayer because of Section 24, and by the way, I am not going into the details of Section 24 today at all. So do check out that video that describes that. But people that want to move their properties into a limited company, but can't or won't go through the incorporation process over 2-3 years through a partnership route, then they could still take this as an opportunity to move properties into their limited company now, which could be beneficial, because there is something that in my mind that you could pay 0% SDLT by moving to a property. I'm giving you an example here, and it's only just popped into my head. I don't even know why, because I've done this shorter video elsewhere, and it's only just come into my head. But if you imagine that you've got 6 properties at £100,000, or in fact, let's think about £300,000. If you think about £300,000 each property, not that you probably will, but if you have £300,000 properties in Reading, you move that to a limited company. Before, you would pay the SDLT banded rate plus the 3%. Well, okay, so the first bit is the SDLT banded rate is now gone up to that £300,000. So that's perfect. Well, it's a 500, but we're talking about £300,000 properties. We're moving that now to a company, no SDLT banded rate, which leaves now the 3% SDLT surcharge. How about we go further and say, well, have you got 6 or more properties, which could then be based on the non-residential rates of SDLT, commercial, and pay the averaging of that and move that into a limited company. Now, it will be based on non-residential rates. So just to clarify, the £500,000 0% SDLT only applies for residential. But could you save SDLT if you take 6 of your properties and then move those into a limited company, getting the non-residential rates and not paying the 3% SDLT surcharge? I think you've really got to do some calculations to work that out. And if your clients, we do welcome you book that call with us. If you're not a client, then maybe you should be speaking to your accountant about finding out what opportunities that exist around this discount, not just the obvious one that's right in front of you, but are there other opportunities of moving properties to a limited company? Maybe there are. So giving you an idea, if you buy a property for £500,000, for this is for homeowners as an example, then you've got the old rate of £15,000 for a property at 500,000. The new rate is obviously going to be 0, and you save this 15,000. You will see a trend, because that £15,000 carries on irrespective of how much you'd be paying after that £500,000. So you can see the kind of rates there. If you want to take a snapshot of that on your laptop or your phone, please go ahead and do that. It's quite good to get some sort of table that you can refer to later on, or indeed you can always come back to this video, right? So this is a nice summation of the savings you can make because of the SDLT holiday payment that's been kicking off. which I think is pretty cool, I've got to be honest. And if you're looking to sell a house, this could be a fantastic opportunity as well. What I've also done is I've done the SDLT now based on buy-to-let investors that will pay the 3%. So I've just included that 3% SDLT higher rate. And you'll notice now the £500,000 property, you would have paid £30,000. Get this, the new rate is 15,000 and the savings is 15,000. I haven't made this up. This is genuinely the calculations we did. And then you got £750,000 property. You would have paid 50,000, but now you're only paying 35 now. So it says only paying 35,000. But how many are buy-to-let investors are really paying a house for £750,000 anyway? Not many, I would have thought. So I won't even go into this column because it's unlikely you're going to be in that kind of category. But it just goes to show you that the £15,000 saving, ultimate saving, is there for home buyers as well as buy-to-let investors. I think that is pretty cool. I did think about, again, I wanted to come on this show, this episode, this series, this video blog, this vlog, this blog with a video, whatever you call it. I want to come up with some extra thoughts about how you can take advantage of this. And the first one is move your properties to a limited company. I've already talked about that, so I'm not going to go too much more detail than that. But you could decide, you know what, I've got a nice house, but I'm living on my own, 4 bedrooms. It'd be nice to have a housemate. Why don't I sell my property, buy a bigger property, and then let out one of the rooms? You can earn £7,500 on a rent a room scheme, tax-free. So someone could come into your home, pay you £7,500 for staying in your property, and you get that money tax-free. I mean, why wouldn't you do that if you're single? It's nice to have some company, get it on there. So you might want to upgrade your own house, sell your current house, upgrade, and when you eventually sell your properties, you don't pay the CGT. So it may be better than a buy-to-let, but obviously you have got now someone living with you. I mean, it could be a way to find your next partner, I don't know. Now, the other side of it is if you don't own any property, I mean, you could now get on the property ladder yourself for the first time. If you're listening to this as a homeowner, who has not even got their own home, then this could be an opportunity. You could be in a position whereby you've bought all your buy-to-let properties inside a limited company, but now you want to buy your own home. No SDLT on the first 500,000. A huge saving to be made. So worth thinking about. One other thing I did think about, which is what I'm doing right now. This background is an artificial background, but the background behind me is got unicorns for wallpaper. Just kidding. No, it doesn't. But it's got 2 unicorns. So the thing about this is you could upscale your own home. We know that COVID has changed the way that businesses have their employees situated. We, as a business, we've opted now to go to pure remote working. We won't be going back at all. So we won't have an office. And that means that we could all basically work from home, get our job done, and have a bit more flexibility in terms of when we work and making sure that we get the job done. But we're not paying for time, we're paying for quality of service, aren't we? So ultimately, we can all go home. Now, with that in mind, you could be in the same position whereby you've been working for in a kitchen, a dining room, or something like that, and you've been hosting calls, but your 2-3-year-old has been running around banging the pans and bang, 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 you're just going crazy behind you, and you're trying to hold a serious conversation, and that just doesn't happen, does it? So now you might want to think about, well, if life is going to change, what I think it does, it is going to change. You could move into a bigger property with a purpose-built office. That is something that you should be thinking about. Buy a bigger house and build that office for yourself and treat yourself. Now we have, as I mentioned before, we are now beginning to create calculators for clients. Don't go, for clients it's free. You just need to ask us. We are in our newsletters. They're not all ready yet, so please don't bang in an email. I want that calculator. Not all of them are ready right now for clients. So we are building a plethora of calculators, and in our newsletter every month, we will be putting in a section to say these calculators are there and free, available for you. For non-clients, if you're not providing us with a service, we will be selling these calculators. We sold quite a few of them already. Surprisingly, I've only just put this one on our website. So this is the stamp duty land tax calculator one. It tells you how to calculate SDLT, even with the holiday period as well. And it's got 6 proven ways to mitigate the SDLT liability as well. So for £10, it's really not a lot of money. It does help you just to think outside the box in terms of what properties you buy. So that link will be below this video after it's been processed and reviewed. Do go onto our website. It is there already. If you go to optimiseaccountants.co.uk, there's now a tab for calculators. You could buy that right now if you wanted to. And then that will take you to the download page to get that calculator as well. It's important to get the SDLT calculator for me because we are seeing a lot of mistakes being made by solicitors. We are seeing that there's a lot of deductions or reductions that can be made on your purchase, and people aren't taking advantage of it. And for £10, guys, it's not a lot of money. So do get yourself that. So the question I've got for you now, just a conversation, and I can then take a breather because, wow, I've not breathed in the last 5 minutes. Will you kickstart your property investments due to the SDLT holiday? So over to you guys. Will the SDLT holiday, which is the 0% for £500,000, will that help you now to kickstart your investment journey again? Type in yes if yes, and of course type in no if, well, no. So go ahead and do that because I'm just going to take my coffee anyway. So let's do that. Good. Oh, hello there, Peter. That's nice to see you. So let's see if my stuff works. So hi, Peter. I don't want to mess things up, but let's give it a go. You're not typing in anything. I'm not moving on. Hey guys, if you're thinking I'm just going to sit around here and just give you lots of content without you participating, you've got another thing coming. So please do type in your yes, no's, and then I'll be happy. So so let's have a look. Let's just go through the questions now, actually, because some questions have come in. Does it apply to LBTT in Scotland too? No idea. I don't know what they do up there. They seem to be doing some things very different to us in England. So really, if you're watching this, you probably need to head off to a YouTube channel about Scottish tax. There isn't going to be one. So you're going to have to make a call to your Scottish accountant, to be fair, because we just really don't know what they're doing up there differently. Well done to Simon. Thank you very much. I do very much appreciate that. Danko, so holiday stamp duty will finish 31st of March 21. Yes, Danko, that is correct. If you want to transfer 100k property from a company to another company, then no SDLT will apply, right? That's not true, Alex. If you're transferring property from one company to another, the 3% SDLTs will still apply. The SDLT banded rate won't apply. So hopefully that's clarified that. There's 2 parts to that question. Oldham Central. Oldham Central? Are you a train station? I'd love to see train stations. Hopefully you've got a beep boop coming through there. So Oldham train station Central. I have a buy to let already, but nothing was renting out until I found a residential home. Would the new home be considered as my main home, regardless of BSU that I already own? Let me read that again. I have a buy to let already. Okay, so that's that, but was renting until I found a residential home. Oh, okay. Would the new home be considered? Ooh, dangerous. So here's the situation. You've got a buy to let property in your own name, but now you're buying a home. My understanding with all this is if the 0% SDLT, fine, nothing like that. But because you already have a property in your own name, as in the buy to let, and then you buy a home, well, then the 3% SDLT will kick in. That's horrible, right? So unfortunately, that is the case. Now, if you had a home before that, and I think we'll talk about November 2018, well, then you could get a discount, but you do need to book a tax call with us, or you need to just speak to your solicitor about that one. Okay, so a couple of questions. People saying, oh, well, actually, is there another question? Let's go through. All mine are under 500k, so no difference. Perfect, Debbie. That's good to see. Ingrid, nice to see you, Ingrid. I've not seen you for a long, long time. Hopefully you're well. Maybe if I had property that I like. Yeah, you've got to do that, right? You've got to buy a property that you do generally like. That's true. Okay, so let's just have a look. So I'm interested in good opportunities. Okay, fine. So some people have said yes, some people have said no. That's fine. Please, look, guys, there are now 36 people on here live. Do make sure you click the like button, because if there's only 4 likes, that must mean that 28 of you, well, that's real bad maths. That means at least 32 of you don't like this session. So if you do like it, please do give me a like, a thumbs up, a like, whatever it is, just to show that I'm delivering some meaningful content. If not, then I guess I should just switch off, right? I don't know. Don't forget to comment as well with any questions, which I see you're already doing, so it's good to see. And I think that's pretty much it. Oh, and don't forget to subscribe to this channel as well. That'd be useful, wouldn't it? Let's talk about higher rates. Now, interesting enough, higher rates. Ooh, now then. We talked about SDLT holiday, but this announcement, higher rates, came in the previous announcement. So we talk about the foreign surcharge. Now, this is an interesting one, because if you're a foreigner, as in outside of England and Wales, I guess, and Scotland, depending on the jurisdiction over there, I guess let's just focus on England right now. But if you're in England buying a property, then you've got the 3% high rate. If you are in, and we're seeing a lot of people actually from Hong Kong, so I will give them an announcement, big up to you guys, because I know you guys are struggling right now with the whole China thing and the unrest that's been going on. And all of a sudden, now China scrubbed me off the list, haven't they? But people in Hong Kong are struggling. So we are seeing a lot more inquiries coming through saying, what if I buy a buy-to-let property in the UK? What structure should I use, etc., etc. And one thing that we need to bear in mind from 2021, we will see this foreign surcharge. So if you're based in a different country and you're buying a buy-to-let in the UK, you will be faced with this 2% foreign surcharge. If you're thinking about moving to the UK, it might be better for you to wait. So if you're moving from Hong Kong, as an example, I know there's other countries, but that's kind of a meaningful news item right now. But if you're moving from another country, Hong Kong, then you might want to postpone the purchase of any buy-to-lets until you get to the UK, because then you don't have to pay this 2% SDLT higher rate or surcharge. Now, the question that came out, actually enough, was what if I'm with a joint venture partner and my joint venture partner is English and they've got 75% of a limited company, and I'm foreign, again, let's think about another country, Dubai, Mexico, and I've got 25% shareholding in that UK company, would I be subject to this 2% surcharge? And the answer to that is we don't know. I've been looking for the kind of small type on this. There's nothing really to be clear about this happens, and this happens. All we know it's 2% surcharge. So right now I'm kind of thinking, well, it certainly will affect individuals, but how much it affects limited companies and how much of a percentage share you've got inside of it, I don't know. But the government are aware that there's a lot more limited companies now being set up for property purchases. So I rather suspect they will be happening. If you've seen something different, by the way, do type that in, because that will be hot off the press. I can then convey that out to everyone else as well. So if you do hear something differently about limited companies and the 2% foreign surcharge, I don't know everything. I've got to be honest. I do research, and sometimes I kind of see literature and then I go somewhere else and I might miss that. But I've not seen anything. So if you've seen something, type it in, help us out. The 3% high rate. So this kicks in from £40,000. This is the high rate that's been around for some time now. This is the £40,000. So if you've got a property, back to the Oldham Central question that said, I've got a property in my own name, I want to buy a home. Well, you will suffer the 3% high rate because you already own a home. Equally, if you're buying a property inside of a limited company, irrespective if it has no other properties at all, then it will pay this 3% high rate as well. You could be in a position whereby you've got this 5%, which basically says you are a foreign person buying a buy-to-let in the UK, bang, 5% extra. So this is the kind of calculations where I've said, okay, with the And this 2% kicks in straight away as well, as for my understanding. There's no £40,000 starting rate. It just kicks in. So you can see here straight away that you've got all these bandings. But, you know, if you're buying a property, not that you would, but if you bought a property at 1.5 million, if you're a foreign investor buying a buy-to-let, not that you would, I appreciate, but 17% SDLT charge, that's crazy amount of money. I'm just going to leave that moustache on my mate. I'm having a cappuccino, but in a Valera Bosch cup. I feel very posh today. So it's gone cold though. So microwave. That's scrubbed off the word posh straight away. I'll just put it in microwave. Does the job. So you can see the SDLT banded rates and charges, crazy. So you do need to bear in mind the type of properties you get into and the taxes. As I said, right at the back of this this session, you do need to think about all of the stuff. Now, stamp duty land tax. I do talk about there are typically about 6 ways that my tax calculator will help you to reduce your liabilities. Okay, when you're buying property, SDLT, how do I reduce it? There are 6 proven ways in my calculator that will help you go through a process. But one of the cool ones, and this is applies to everyone, and it's something called chattels. And I know I've talked about this many times over, but the more solicitors I speak to, the less it seems to be prevalent. That no one really talks about chattels. And you're like, well, why wouldn't you? It's such an obvious thing to do. So chattels, just to let you know, are things that your seller would leave in the property when you buy it. Typically, you don't really find people, apart from those tight buggers, you know, they'll want to take every curtain with them and they'll lift up the carpets. I mean, really, where are you going to put it exactly? It's not exactly going to be the perfect size in your new property. Just leave it, will you? Don't know why I went on rant now. I'll need to take my Prozac later on. Anyway, so you could leave curtains, you could leave your carpets, you might leave some furniture. You might find people that are leaving their beds behind. Ooh. But they could be leaving the dining room, the settees, and so on like that, because of downsizing. And it could be that you have these assets left behind. They could, in the light fittings, light bulbs, the light nice chandeliers, if you like chandeliers, lampshades, and various other things, and then curtain poles as well. All of those things are called chattels. Now, I forgot to mention things like TVs, appliances, and stuff like that. They are also chattels. And the reason why that's really a useful tool to know is because if you bought a house with £350,000, and by the way, this is just ignoring some of the recent news announcements, etc. But if you've got a £20,000 chattel list, and again, it's your seller that would have to write down all the things that they're leaving behind, and then they would have to place a value on it. Interesting enough, even when you've done that, your solicitor may completely ignore that they've just written a chattels list. So when they do the SDLT, they'll still charge you based on this £350,000. So remember I was saying is that solicitors aren't really commercially minded. They are transactional robots sometimes. I've got friends who are conveyancing solicitors. Okay, so I can get away with this. They'll find me out later on Facebook and then say you're a boring accountant. That's all right. That's what comes around goes around. I get it. But my point is that you do need to check with your solicitor that if you've listed your chattels, that they base the SDLT calculation on this £330,000. Even if you've written down your chattels list, I also suspect they will still charge you £18,000 on SDLT because you thought, well, I've done everything I've done. Surely they'll do the calculation right. Wrong. Not always. So you do need to check the SDLT calculation that they've correctly done it at the 16,400. So there is some savings to be made just by the simple chattels. I'm talking about a spreadsheet of costing £10 that can save you a good £1,600. It's a no-brainer, right? So go and buy that. I didn't think I would make a good salesman. Now I'm just a pushy one. So anyway, moving on. So as I mentioned before, SDLT can be reduced. You could buy non-residential. We talked about converting offices to residential. Well, then all of a sudden you don't have to pay the the residential, I'll try and get my words out in a minute. There we go. So the 3% SDLT surcharge doesn't apply if you buy non-residential properties, and the banded rates are also less, or was. You do need now to do your calculations. But by the by, you could do this kind of commercial properties where you buy an office. Oops, oh, my pen's gone. You could buy an office, you could buy a shop, you could buy a warehouse, you could convert it then into residential. There's a huge amount of opportunities here that you can do. If you bought 6 or more properties from an individual, indeed, you could buy your limited company, you could buy 6 or more properties from yourself. And actually, I did a tax call on Thursday night. I must drink this coffee. So we had a paid for tax call. And I think, you know, £375, we saved them about 15,000 a year. I mean, it's crazy. But, you know, it was worth it, I'm sure. So they bought this 6 properties. We looked at what the configuration was and we said, do you know what, why don't we move those to your limited company? You don't need the money. We can do some IHT tax planning as well. It could save you a chunk of cash right now because Section 24, we move it in and sure. He bought the limited company, his own limited company will buy these 6 properties from him and he will pay the lower SDLT rate. Perfect, right? So it's worth looking at. Mixed use properties, not many people are doing these and maybe they won't do for some time, whereby you have a shop or an office down below and then you have a residential unit above it. That can be quite useful if you're looking at maybe having a shop for yourself and then living above. The SDLT rates for home purchase then will be on the non-residential rates. So there's many ways of reducing SDLT, if I'm honest, far more than I've put on here. But it's really important for you to understand that level of tax. SDLT itself, I've got to say, when we were doing our ACCA studies, we didn't really talk about SDLT. We just did. When we did our tax exams, we didn't really talk about SDLT. So there's this kind of niche. Accountants don't get SDLT, in my opinion. Tax advisors get SDLT to a good degree. But if you're a specialist, that's when you really can understand all the nuances of many ways of saving SDLT. It's a rabbit warren, I have to say. I'll go past this a little. So this is the interesting thing. So we know that the SDLT banded rate is now lower, right? But if we look at the old rates, then the buying a house for £600,000 or a mixed use property, so let's imagine a shop and then a flat above it, then the SDLT banded rate, which we've got a holiday for, which is perfect right now, would be £20,000. The SDLT surcharge is £18,000, so it's £38,000 in total. Now, if you wait until March next year, you can see that you're going to be paying this £20,000 more in effect, or this kind of 15,000, I think I said, of savings. Now, mixed use properties, you're paying 19,500. So right now, I would say that if you was to buy a home, you would probably pay less than a mixed use property. So it's interesting how the purchase of residential is, on an SDLT perspective, could now well be cheaper than buying commercial property because of this 0% banded rate, even though the 3% surcharge is in place. So we do need to think about now, what properties do we buy when? Because there is this holiday period. It is just going to come to an end at some point. And Danko said that it could be a property crash in March. To be fair, Danko, everyone's predicting property crashes all the way through the next 20 years. Who knows? No one's got a crystal ball and no one really knows. And don't get me started, Danko, on the FTSE 100. When this crash happened, I made a bit of money out of it. I put money into the FTSE 100 at 5,100, and sure as eggs is eggs, within 3-4 weeks, it was back to 6,000. Like, crazy. What are you talking about? It's worth 6,000. We're not even in recession. Why is it worth 6,000? I think analysts in the city are just a complete waste of space. I don't think they know what they're talking about. They're all about bravado and look at my chest. No. I think it's more to do with it's all based on emotion and preying on people's emotions. None of it is logic based, I have to be honest with you. And I know that for a fact because I worked for Imperial Tobacco. We did a budget went to the city to present it, and they said, no, we're not happy with that. You're going to have to increase your profits. Well, out of what? Anyway, like I said, Danko, that's your fault. I'm putting the blame on you. So I'm at the next section now. So please do press that like button. Let's have a look where we are. Six likes, really? Come on, there are 37 of you watching. Oh, we're now just 13. I'm watching you all. I do know who's pressed the like button, by the way, and I will ban you if you don't. No, joking. I don't actually know who does it, and I won't ban you if you don't like this video. Just thought I'd throw it in. So let's have a look at what we've got going on. Let's have a break for a second, and let's have a look at conversation. Andy, you're welcome. Spot on as usual. I'm pleased to see that. Oldham said, yes, train station, laugh out loud. Oldham, brilliant. Just drop me a line, just say hi. That will just make me chuckle. In fact, next, troll me from now on. That'd be even better. So Maria said, I expect house prices to drop quite a bit if there's no Brexit, massive recession 2021. In addition, many people will be rushing to buy now, and the sellers may push up the price. I think you're right that people might push up the price a little on houses. Would there be a deal? Would there be a Brexit? Will there be a recession? Again, like I said to Danko, no one really knows. I think everyone's speculating. You could argue that there's going to be a huge thing, but remember the millennial bug in the year 2000 when everyone thought that every IT system would shut down? We woke up that morning, and what happened? Yeah. So Ingrid says, so there is no difference in SDLT properties below 500,000. Well, what we're saying, Ingrid, is that there's no SDLT liability on properties 400,000. So if you remember that the SDLT banded rate kicked in at £125,000, and I think it's on a low rate of 2%. Well, anything up to £500,000 is no SDLT band charge at all. So 0% of properties up to £500,000. So it's worth doing that. Get that calculator. That will really help you. What are the SDLT implications for moving your commercial property to a limited company? Well, everything we talked about today is not affecting commercial property. So if it's a commercial property, moving it to another property, into another company, it does depend actually, because if you're using it for trade purposes, then there are concessions on that. If you've got a commercial property that you're just renting out and move it to a property company, then you will pay the non-residential rates of SDLT. So there's those comments really. Okay, so let's go on to, in fact, let me just take a look. Okay, how are we doing for time? Let's have a look at time now. 9:52. I think we're doing good. Let's talk about green homes and grants then. The first thing is the green homes. There's not much literature. I appreciate Rishi did a brilliant job. I was getting palpitations. I was getting a little bit of sweat going on there because of all the good things that he was doing. I thought, wow, this guy really knows his job. Shouldn't he be PM? I mean, Boris is doing a nice job. In my opinion, that's a divided opinion. And by the way, let's not have a scrap on YouTube, okay? If you like Boris, great. If you don't like Boris, great. I love you. It's your opinion, and you're absolutely entitled to it. I'm just clearly not on this planet, okay? So I'll just put that out there. But I do think he did a brilliant job. Now, green homes. Let's talk about green homes. Now, what we understand, because there's zero out there in terms of the literature, it's going to be announced, and it will start, interestingly, September 2020. So we've got a couple of weeks, I think, before the government really understand how it's going to deploy it, because there are even different names coming out. There are vouchers or there are grants. They are very different things. Vouchers is something that you give to people, that you give to the tradesperson. A grant is something you apply for. Now, I think the people that have been saying vouchers are wrong. I think it will be a grant application whereby you have to go and go through this portal that the government will create. They will say, right, what are you doing? You will then demonstrate the work, and then I rather suspect you'll have to put invoices in for that application to go through. So I think that's what the approach is. Now, when they announced the 5,000, there's two. There's the 5,000 and 10,000. but please note that it's only paying 2/3 of the cost. Now, 66%, check my maths out. Well, actually it's 66% 0.6 recurring, actually, if you did know your maths. Anyway, so 2/3 of the cost would be going into your accounts. And with that, you would have £5,000 as a cost. So in effect, you might have something at 6,000, but they will give you 5,000 or the maximum of. So if you had 10,000, it would be a maximum of 5,000. That's probably the better clarification. So 5,000 is the maximum. They'll pay 2/3 of the cost of doing the green homes efficiencies. And I think what they're trying to do is look at old boilers. They're looking at old electric boxes. They're looking at all the kind of double glazing around a property and just making it more energy efficient. Interestingly enough, they did make a statement that they didn't feel that this was the real push toward true green homes. I thought it was really fascinating as a comment, but coming back to this, there will be grants available. And for this will, I believe, apply for homeowners as well as buy-to-let investors as well. Because you've got to think about this. When they did the a long time ago, they did these leasing schemes, which is all to do with the energy efficiency. They allowed the tenant to apply for these grants, and then the landlord could do the work and get the money back. Well, I don't think that's going to be too dissimilar, whereby you as a landlord might want to make your home more energy efficient, which is perfect for HMOs, because you want to do these kind of things anyway, so that your utility bills, if you're paying those on behalf of your tenant, should reduce over a period of time, as long as your tenant doesn't keep leaving those windows open. Apart from that, you can get these grants. Again, starts in September 2020. That's all we know. So I can't really go into much more detail. They did talk about this extra additional £5,000 here. So £10,000 worth of vouchers or grants. Now, this is unlikely to be used for landlords because it's specifically aiming at low-income families. So if you're a low-income family and you want to do even bigger home improvement for energy efficiencies, such as double glazed windows or triple glazed windows, whatever you might want on that, better cavity insulation in your bricks, then that might cost a lot more. And therefore, they will get this extra funding of £5,000, so a total of £10,000 worth of vouchers. Again, please do note, it's worth noting yourself here that it is still only 2/3 of the cost. So they're not going to get everything paid for if they go above that item. Or indeed, even if it's £5,000, they will still only get 2/3 of that. So we do need to bear in mind that there will be a payment from us as landlords or us as homeowners to make these improvements. It's not free. The one thing that I will say to you all is just because you get a grant and you get that there, it is likely to be a taxable income. And that's because you are not paying for the work to be done. So it could well be grant money coming into your business, and you then have to declare that as income. And again, you do need to be careful of fraud, because if you're getting this money and don't declare it, that could be a fraudulent claim. So when this all comes in, you do need to be very, very careful about what you do and how you go about it. And that is my coffee finished with. So I'm going to give up now. Can't do anything without caffeine, let's be fair. Wasn't you so happy that Starbucks and Costa was open? Crikey, when I queued up for days to get to my Costa, I have to say. It was well worth it. Okay, so let's just go back to your comments and thoughts on what's been going on. Maria, you're very welcome. I'm always here to answer people's questions. I think it's only polite to do so. So have you found this useful? Please do let me know. I can see there are 43. How come we got more people joining us now than we did before? I don't know. It's if you're joining us and you're halfway through, this video is being recorded on YouTube Live, so you can always go back to it. So hello, good morning, and you can, like say, go back to this video at some point in the once it's been processed. Put it that way. I think that it takes about a day to YouTube to process this stuff. Okay, so Debbie, you're very welcome about the clarification point on green homes. Hopefully that's useful. Okay, so let's talk about holiday let service accommodation. By the way, as I said from the outset of this session, that I think that holiday lets will be a huge outcry for more. One of the things that I did was I said I wanted to get away with Louise and Hugo. And I went onto various websites looking for decent, of course, because I'm a snob, decent homes to go and rent for maybe a week. And it was astronomical. We talk about 3,000 for a week. And I'm not talking about the Ritz either. I'm talking about Inglemells. So if you imagine, no, I'm not going to, no, but you know, the idea behind going away is a huge demand right now. People are stressed. People are worked up. They've been working hard. People that have been furloughed are probably going stir crazy in their own homes. They want to get away. And I think what Rishi should have done is said, you know, we'll pay for holiday lets. Wouldn't that be great? Everyone would go away on holiday and they would spend more anyway, wouldn't they? Because they'd be out and about. So that would have been really good. But not to say Rishi's not done a brilliant job. I personally think he has. I'm sure people say he hasn't, but I think he's done an awesome job. So holiday lets, 5%. I think they're going to be in demand. One of the things I want to bring to your attention is this bit, and this is my old slide presentation where I talk about Section 24 mortgage interest relief mitigation. I brought it in here because I do think that holiday lets is a great way of mitigating the impact of Section 24. I'm not going to go into the other stuff. That's not what I'm doing this for. But holiday lets is a fantastic way. Mortgage interest relief, you can get 100% of the mortgage interest costs offset against your rental income on your furnished holiday let. That is brilliant. Okay, you don't pay any tax, more tax than you would normally. So the Section 24 does not apply to holiday lets. That's why it is such a good thing. What makes a holiday let? Let's just clarify that, because I always get these kind of questions. A holiday let has to be made available on Airbnb, Booking.com, or various other websites that's probably now going to sue me for not mentioning their names. But it needs to be made available for 210 days as a holiday let. And it has to be let for 105 of those days. So it's got to be available and it's got to be let as a holiday let. It can't be really put out there for 31 days. So you can't just say, well, it's holiday let, but I've got a 6-month AST in place. That really doesn't work. It has to be a holiday let and acting in that way. It needs to be commercially let as a furnished property as well. So if you meet this criteria, which doesn't seem to be that much of a stronghold, that you could make this as a business. And I think with the rates of FHL right now, they are far better than single lets, I've got to be honest with you. But it is a business and you've got to systemize it. There are great educators. I'm not a property educator in this field, I've got to be honest. Well, in any field, really. But property, furnished holiday lets, the whole service accommodation industry is so embroiled with difficulties, especially if you're in London, right? So you can't even get your property listed for more than, I think, is it 90 days in a year, which means you would fail to meet the FHL test in the government. So it's really not going to work for you in London, but outside of London, it could. And because of this 5% hospitality, demand will be pushed up. I'll give you an example. If you think about where I talked about going into a furnished holiday let with a furnished holiday let that is VAT registered, so above £85,000, you would need to register for VAT. You would normally have £100, but you'd have this VAT as well, so it'd be £120. Now, with the changes that's coming from 15th of July 2020, so not at what date we're now, the 11th, 12th. So it's coming into effect on the 15th and then ends on the 31st of January 2021. So if you then wait to book your holiday, even if you're lucky to book holiday, you should see a reduction going from £100 down to 105. You've just saved £15. That's a lot of money to save, isn't it? So you've got to think about it from your perspective of booking holidays, wait and then book if it's going to be VAT registered. Or if you are going to be furnished holiday let, you've now got to drop your VAT rates from 20% down to 5%. And I know there's a couple of people on here that this will affect. There are a couple of people that do flat rate schemes. How will that apply as well? And by the way, I haven't put that in here. That's another complex area. So if you do VAT, you've got to drop your VAT rates if you're charging that out. And if you're on flat rate scheme, then you've got to do something else as well with your Zero, QuickBooks, or whatever system you use for VAT. It's going to be a bit of a nightmare, I've got to be honest, but it will make you more money. So a bit more administration, a lot more money. It's a fair trade-off. So I think that's something for you all to bear in mind. As I said on here, that Furnished holiday lets is going from 20% down to 5%, but food and drinks is 20% to 5% as well. Going beyond that, I said in my article, if you go to optimiseaccountants.co.uk, and then on there, I've got an article to talk about hospitality industry going from 20% to 5%. I talked about how people could save a lot of money going out, actually, going forward. It talks about food and drinks getting 50% vouchers off the food price of the food, up into including £10. So if you've got a family of 4 spending £40, you've got to think about a couple of things that's going on here. Typically, it would be £40 if you normally go out, £10 per head, family of 4. All of a sudden, you're paying just 20. But because the VAT rate is also being dropped, you might only pay about £16, £17, right? So you go from 20 to £40 down to £16. So you as a person listening to this now, you will be paying less and getting more. There is a TV show, and I'm dying not to say it because it's really bad. But if you are going out, you will see a reduction. So do keep a lookout for all of these prices that from the 15th of July will start to be doing these vouchers and reducing their rates of VAT on all of their food in restaurants. Restaurants' food is going to be so cheap. And in fact, I rather suspect that eating out in a restaurant might be cheaper than eating at home on getting a takeaway. Because I don't think takeaways are part of this. I could be wrong, but I don't think you're going to get vouchers and VAT reduction on food on takeaway. I think it's more about what's the phraseology? Eat out to help out. Eating out in a restaurant, bar, that kind of thing. Funny enough, when I talked about this, again, I wanted to have a thought process of why you should be in holiday lets going forward. So I think it could be a booming industry. Like I said, I have a family. We want to go away. We don't want to pay £3,000 for a week. No, thank you. So we want you, selfishly, to give me a house on a coastal line somewhere. If you've got something, send me a link to it because I want to know where it is. I might even book it tomorrow. No, of course I won't. I'll book it on the 15th when the VAT rates are reduced. Thank you very much. But if you do have a property, Furnished holiday let, I'm asking you, send me a link on this video so I can go and have a look at it. And actually, isn't it a great way of marketing your own business in a way? So I'm giving you total freedom to do that. And I'm not even going to charge you an admin fee. So go do that. But benefits, no, there's benefits two-way here. So UK demand will soar. I absolutely think this will happen. People will not want to be going abroad on a plane, tin can that can give you COVID. I just think that's really worrying. The WHO announced that you could have air particles now that can stay for 30 minutes. You could walk into someone's vicinity after 30 minutes and get COVID. Oh, that's really worrying. On a plane, wow, that just thing gets circulated there, right? So that's just going to go air particle there, but yeah, 30 minutes, it will stay in the air for 30 minutes, but we're going to circulate it, right? Not nice. So that's going to make the whole UK travel so much more important going forwards. Also, I think there's lower cost, greater demand. You know, going away on a plane, going to a place that you don't know will cost you more. If VAT is lower in the UK and we're charging less on that front and food is cheaper, then that's better. People might not have money. Maria mentioned about recession, so did Danko, about property prices being decreased. People may not have that spare cash. They may be squirreling around money, but I'm not, by the way, sure why I've got furlough there. That's got no importance at all to this slide, so sorry about that. But there will be greater demand in the UK. So if we had the sunshine, it'd be even better, but we don't. So, you know, we've got to think about that. One of the things I do say is if you've got a Furnished holiday let, isn't it time that you thought about creating additional services? And what I mean by that is What about people on arrival, like going for a holiday weekend and saying, well, I'm going for a romantic weekend? You put on there, because I went to Centre Parks once, twice, 3 times a lady. So we've got this, went on this Centre Parks travel. And when I was booking it, they said, well, do you want to go away and would you like a romantic bottle of wine and strawberries? We're like, tick. Would you like logs on the fire? Oh, yeah, tick. That's £10. Never use them. And would you like to have a food hamper for the week, like starter kits, bread, milk, whatever else? Tick. I spent about £45. I'm sure I could probably spend the same things for £20, but it was convenient. It was already in the property, in the place I wanted it to be. I didn't want to do anything. It was great. Could you do the same thing? Have you thought about, we talk about sweating assets, but do you sweat your assets? Do you have a furnished holiday let that you're sweating the assets as much as possible? Doing this intro of saying, would you like food on delivery? Would you like your clothes cleaned? Would you like this? Would you like that? I think you've got to think again outside the box and saying, it's nice touches that you should be doing for free, but there's nice touches that you should be charging for that people will pay. So do think about that as you look at your business and start to generate as much money from your furnished holiday let as possible. One other thing I did talk about is capital gains tax. Now, if you have a furnished holiday let and you bought it as a furnished holiday let, then there are different types of taxes that you can claim for. Normally, you've got a capital gains tax annual allowance of 12,300. So if you make a gain on any type of asset up to 12,300, you don't have to pay any CGT. But as a basic rate taxpayer, you would pay 18%. As a high rate taxpayer, you pay 28%, right? Right. As a buy-to-let property investor, but not as a furnished holiday let investor. Really interesting. And that's because you can claim, so I'm going to ignore entrepreneur's relief because people know about that, but I want to really focus on rollover relief, where CGT is at 0% CGT, 0%. Okay, so no capital gains tax when you sell a furnished holiday let. How do you claim that? So what you need to do, in effect, is that you would need to take the proceeds of selling a furnished holiday let. Let's imagine that you had it in the FHL in London. Now, all the local authorities have got together and said, you can't use it as a furnished holiday let. Again, I put furlough, lazy, absolutely lazy. So you might have an FHL in London. It's not going to make you much money now because of all the restrictions. So you might have to sell it. So you know if you've got property in London, it's going to be a high CGT. You don't want to sell it. Oh, if you're stuck, what do? You could cry, but that's not going to help, is it, really, long term? So what you might want to do is sell that property and then buy another asset, business asset, another FHL, maybe north of London, or you might buy another business type asset, equipment to be used in your business. And if you do that within a 12-month period, then all of a sudden you can get this rollover relief. Now, you can claim a rollover for relief for 1 year prior. So if you've not claimed, if you sold a property, you pay CGT on it, and you then bought a FHL, you could go back to your previous tax return and correct it. So that means that you could get the tax you paid on that disposal back from HMRC. And you can also go post as well, so you can go 3 years. So you've got time to claim this rollover relief. That's what we're saying here. Now, what we're saying here as well is that with the old and new asset must be used within the business. Now, you could be in a situation whereby you've got furnished holiday let, you're buying another furnished holiday. What you can't do is sell a furnished holiday let, claim a rollover relief by buying a normal buy-to-let investment. That's not trade. That's not a business. That's not going to meet the conditions of rollover. You have to sell an FHL and buy an FHL. Equally, you can't sell a normal buy-to-let investment and then, sell a buy-to-let investment and buy an FHL and get this deferral. That's not the case. It's the only time you can get it. For absolute clarity, listen well. This is where you sell an FHL and buy an FHL. Sell an FHL, buy an FHL. Sell an FHL, buy an FHL. Are we getting that? Hopefully we are. So please don't ask the question, does this apply to buy and sell investments? Because it's not sell a FHL to buy an FHL. Sell an FHL, buy an FHL. Really, I'm hoping that's got across. Okay, so what would happen here is that with this, you would sell a property for £200,000. You've got an original cost of £100,000. You would ordinarily, on an FHL, have a gain of £100,000, which you would be subject to CGT, but rollover relief would be given in full if the £200,000 is reinvested into another asset. You would only get partial relief if less money is reinvested. So if you invested £100,000, you would end up still paying CGT on the £100,000 that you have not reinvested. So you have to reinvest the whole lot into an asset. So this is really, really important when we're talking about rollover relief. It is a brilliant, brilliant, brilliant thing to do. FHL could be the future. It's higher return on your money. It's got a better VAT perspective. It's got a lower SDLT purchase acquisition now because of the holiday, and you don't pay CGT either. I mean, it's all good, I've got to be honest. It's a new industry, so that's why people might not do it. Wow, I'm exhausted, I have to be honest. And I put so much effort into these slides, apart from the furlough, clearly that was really lazy. But let's get back to you now. Let's talk about whether you are thinking about Furnished holiday lets as a business, or has this now prompted you to think about it? Let's get over to you and your thoughts. And what I will do at the same time is I will also take any questions that you've got as we come to the last stages of today's session. So let's just have a look. So Marie's asked, what are the implications for moving? Oh, I've answered that, sorry. Oh no, not many questions. So Adeo's asked, yes, it's clear on the greenhouse grant. Good to know you can use for double glazing windows and doors too. Anything, Adeo, you could use it for any type of product that will help with the whole environmental support, improving the heat staying in the property, basically. So loft insulation, double glazed windows, even cavity in the bricks, better underfloor heating, maybe, I don't know. But that could be true. So what are your thoughts then, guys? Don't forget to, I want to know what you're doing. Ingrid said too much work. Yeah. What anyone listening to me on this session is, I might be telling you the pros of holiday lets. And by the way, I'm not doing holiday lets yet. I'm going to make a big announcement next year about what I'm doing on FHL. And it's going to be big, I've got to be honest. But I'm going to keep that really under wraps for now. Not because I think people are going to steal the idea. That's not the point. I mean, there's plenty of properties, right? But it is purely down to, I want to make sure it works before I unveil it. So it's going to be 2021 before I announce that. But lots of people say it's too much work, not right now. And I can understand that, because it is a lot of work. You've got to systemize your business. You've got to now have people turning over every, maybe a weekend or a week, instead of an AST where it's simple, it's nice and easy. So you have got to think about it. And when I talk about property investments, I often talk about single lets is your number one choice if you want a quiet life. So you don't have any noise from tenants grouping together in the HMO. You don't have many people coming in and out of your property. If you're a furnished holiday let or anything like that, there is a quieter property strategy. I'm going to talk about that in a second. So a quieter property strategy, which one do you think it is? We haven't talked about it on this show really in any detail. So if you know, put the answer in, and I'll talk about that last. I think that's probably the best way of doing it. Don't forget to press the like. So we're up to now 21 likes, and we had 30 odd people on here. So 36, 37 people. Please do give this show a like if you find it useful, because that would really help the YouTube algorithm. It will get to share this amongst the peers as well. So that would be really helpful. Don't forget to subscribe to this channel and carry on asking your questions. It is live. I want to be able to help you as we go through. Bounce back loans. Let's talk about the pros and cons of those. So bounce back loans, everyone's probably got one. All right. Everyone's spoken about them, that's for sure. But you can get loans up to £50,000. It does depend on your trade income or your forecasted loss of income, interestingly enough. So you can apply for loans up to £50,000. The criteria is that your business must have been affected by COVID-19. So it's not really there to say, well, I actually want to buy another property. It's not really there for that. It's not designed. That's not the spirit of things, as they call it in HMRC. It's there really to help your business get out of a mess. So that's something to bear in mind when you're applying for this. There is a repayment. So there's a 12-month payment holiday. So you don't pay any capital or interest for the first 12 months of taking out the loan, which is great news, I have to be honest. And we've got then a 2.5% interest rate. So it's really low, I have to say, in terms of the other types of investments that you might make. So these are really good positives, is that going forward, the application, it's a 2-page document. So if you've got a trade business, or you're suffering because of COVID and you're starting a business, or your business has been affected, you could be marketing, you could be in the hotel industry, you could be in various industries that are generally affected by COVID. A 2-page application is brilliant. It's something you could do in 10 minutes. There's no financial criteria, so they're not going to look at your financial record to say this is something that you need to meet. It's not the case at all. It will help you to carry on your trade. It prevents business failure. That's what it's all designed to do. So if you're panicking because you got a VAT bill or a bill that you can't pay for HMRC, for instance, and you can't defer it anymore because they won't allow you, then you might want to use this loan to pay that off while your business starts to pick up again and you focus on marketing. That really is an important aspect of this. Debts. I mean, you could pay off more expensive debts. And to be honest, we haven't taken the bounce back loan within our company, but we have taken the C-bills loan, which is the bigger loan, if you like. And we've looked at our business and we've restructured our business to really take advantage of coronavirus. And we've taken one of these loans, C-bills loan, which is lower interest than our commercial loan that we've got. And we don't have administration fees, etc. So it's really worked out well for us. COVID-19 is also meant that we've not got an office anymore. So we have reduced our prices to our clients, and we've sent notifications. So clients, if you haven't booked time with me to talk about your pricing, and you can see by my email, you can reduce your price. It is an option. It's not a force. So make sure you do that. But I've been able to pass on the cost savings we've made onto our clients, because we're in this boat together and we need to work together to get out of this mess. And we can only do that by helping one another. Now, one thing I did want to bring into attention is, and I don't think many people have done this, is that the calculation may differ from bank to bank. But what I've done is I've based my calculation on a 2.5%, which we know it is, on a reducing balance. So that's basically what I've done. And then I've just taken the average. Now, one thing you'll notice is that you've got £50,000. Now, it does have to be paid back within 5 years. So the interest on that 5-year payment term would be 3,177, sorry. Which, if you look at it, the total debt of 53,177, it doesn't sound like a lot of money at all. And people looking at this thinking, well, that's fair enough. I can really afford that. That's cheaper than a 2.5% is cheaper than a buy-to-let mortgage. So if I've got a small mortgage, could I repay that off? Again, is it in the spirit of things, or maybe because it's helping you to stay afloat? So then I would argue the case. But 2.5% sounds pretty, right? Compared to a buy-to-let mortgage, it might be 4.5%. Really, this could work. However, and this is the however bit. So what you need to bear in mind, this £53,000 needs to be paid after the first 12-month holiday period. And then after that holiday period, you then have to pay £886 back every month, which is based on the calculation here. So 886, that's far more than all, I would argue, than your buy-to-let mortgages. And that's because your mortgages are spread over 25 years. This is only suppressed into 5 years repayment. Therefore, your repayment will be significantly higher. I will suspect, this is my forecast, I suspect that with a VAT deferment to the 31st of March and with the bounce back loan that people are taking, people are going to be more of a financial crisis next year than they are this year, because we've had so much support from the government that people they won't save. We're not a country of savers. We don't do it. We kind of get the money and we spend it on the majority. I'm not saying you listening to me, but I'm saying on the majority, people get the money, they get, oh, give me, and then they spend, which is great for the economy on recovery. But then we've got to pay for all of this. And what do we think is going to happen when we've got to pay the VAT that we deferred and now this £886? So I'd be really interested to see what happens with this, because people are going out there getting stuff. And I have heard news that people saying, well, they're going to get it and not pay it back. And I don't personally think that's a good thing to do. You've got to be very, very careful with that. So have you already, or are you thinking of getting a bounce back loan? I'm going to take a slurp of juice this time, right? Because I've got no coffee. But really, I'll be interested to see what you're doing with the bounce back loan. Are you taking it? Is this something that you're doing? So Yazyap, oh, actually, got another one. More people coming in. That's perfect. So we've got Ingrid saying, easier life, letting your house out long term to housing association. Yes, that's an interesting one. So Bronwyn Vernicum, who is one of our property expert panel on a Monday, which we do every first Monday. She talks about these housing associations and renting your property out to them. And I think it's a great idea. So they do guarantee your rent to you. So that could be worthwhile. And they refurbish it back to the state that you gave it to them after the 5-year term. So that's quite useful, to be fair. But yeah, I think housing associations, it is a way forward. The councils have got people living in hotels right now. That's not good. That's not sustainable. So they have to now get homes. You knocking on their door saying, I've got property to house families, they'll be biting your hand off. I've got to be honest. They may not pay market rent, but you haven't got tenant issues because they will be dealing with those tenants for you. So that could be something to think about. Have heard a lot about that, Ingrid. So Reza and Ingrid, you're starting a good conversation. Love it. Nice to see what's going on there. Yes, it said, would the additional 2% SDLT apply to non-UK residents who have exchanged prior to new regulation, will be complete after? Well, SDLT is charged on exchange, not completion. So typically, I would say you should be okay, but make sure that you check with your conveyancing solicitor. Gopal, well done, Simon. You're very welcome. I'm glad it's helped. Raz is getting involved now with Janine, saying rent seems to be labour intensive, not great if you've not got a decent paying job. I don't know enough about it, but it's good to see you guys do. People say no loans for me, and yes to a loan. So only time will tell about the loans and whether people go for it. My view is if you don't need it, don't use it. That's my opinion. Okay, don't forget to like, subscribe, comment, as I said before. Now, this is talk about the new session. So do help me out. If you've got 10 minutes to spare for me, that'd be fantastic. We're talking about future live episodes or how I can help you more in the future. I'm looking to do more on that YouTube channel to help you go forward. So just type in one option if you don't mind. So what tax education format do you prefer? This is current format, by the way. So do you like these YouTube live sessions? So put YouTube live. Or do you like the 5-minute? So 5-minute vids, or do you like the articles? Do type in your selection here, because that really helps me. Because one of the things that I'm looking at is, are these sessions useful to do every month, for instance, on a Saturday? And Saturday seems to work because there's more people available. We could do it midweek. Maybe midweek is good. So maybe tell me if midweek's better than the weekend. Well, we could do that. So are YouTube live session useful? 5-minute videos or articles. Now, 5-minute videos, I do probably 10-minute videos, if I'm honest, on YouTube, and I will do 2 a week. So if you like those more than these live sessions, then let me know. But equally, if you like our articles, which typically embed our videos, then do type that. If you like that type of format, which one is your preferred one, though? That's what I'm looking for. So people are saying YouTube videos, but send a newsletter so we can see them. Yeah, I send YouTube videos, so hopefully everyone gets a YouTube newsletter from me. 5-minute YouTube videos, bite size for busy people. Yep, got it. Once a month. Wow, once a month. Live is good. I like both live sessions and 5-minute videos. All right, that kind of pushes me down that path. So thank you very much. Now, one of the things that we do on our channel is very much property tax, and we haven't really veered off to property education. That's because there's so many educators out there. But would you kind of think that it would be useful for me to create 5-minute videos talking about property strategies? Because I'm a property investor just like yourself. I've kind of gone through the mill on many projects. Some have failed disastrously. Some have done really well, and I would do again. And some things I'm experimenting going forwards, as I mentioned about 2021 learning. So would property education videos, learning from my personal experience, be useful? Here, just put yes, just yes or no. I think I'm just trying to make it complicated here. So yes or no to property education videos. So I'm just going to put in prop ed. So I can separate these because I'm going to go back to it. And it's important for me to know where I should be pitching this channel for going forwards, because I've talked about tax, but sometimes you need to make money fast and then you worry about the tax liability. Make money, pay less tax. Make more money, pay even less tax. And that's where I want to get to with this channel. So it's not just about tax going forwards. So a lot of people are saying yes. So I'm pretty pleased about that because I was really excited about doing something. But as Louise told me, don't do something just because you're excited and no one else isn't. So I think that's great to see. I'm going to do that. So every week I will do a 5-minute video talk about different property strategies. And I'm more than happy to do it. So I'm pretty excited by doing that, if I'm honest. And what useful topics are useful? To be fair, I will leave it on there. If you are a client and you found something useful, Lynette, right now, she's doing a brilliant job of doing all of our, I notice I've done people on the bottom bit there. Let me just script that out. Lynette is doing a great job of doing the tax consultations. So if you're a client, you will get Lynette to do that. I'm kind of trying to do these type of education and also getting out there in terms of providing support to everyone, building these templates, etc. So I'm not always around, I've got to be honest. But if you want to book a call with me for £375, you can do so. Clients listening in, don't worry, you're not going to be missing out. What I'm going to be doing for you guys is a new brand of type of support, which is talk about a property strategy review, which you'll get, but it will be a cost, but you will talk about maybe £200 for an hour and a half. That will basically look at your property portfolio as a whole. We'll look at how much money you're making. We'll look at CGT, we'll look at IHT. So we'll be doing that. That's a 2-hour session for clients. I am going to be announcing that in a couple of weeks' time when I'm doing my next newsletter channel. But for anyone listening who's not a client, feel free to type a question. It is £375. Please ignore that. I'm not sure why I've got that still there, but it's £375 for an hour of my time to help you understand where you go on your property journey. So you can book that. A link will be provided below this video, but also the links are on our website as well. So go ahead, use the code YouTube25 to get your 25% discount if you're not a client. If you are a client and you found a lot of this information, don't sit on the sidelines. Please get onto the, you know how to book calls with us. Get onto that. I do take 1 or 2 of these calls when Lynette's really, really busy. But let's get you some answers, because it's really important for you to understand some of this education that I'm giving to you, but it's more important for you to actually make use of it as well. Okay, so Adeo is saying property tax and vote. Okay, cool. Not sure what that was about. Anyway, so let's have a look in terms of the yes, but without losing focus. Audrey, I think the thing is about when I'm doing certain essence is I will be focused on tax. I'm not going to be not doing the tax videos, but it was just about, do I introduce another video in the week talking about property strategies? And that's what it's about. So I think in terms of that, I am kind of a bit more excited about doing that. So that's pretty much it for today. So I've just now run over by 4 minutes. I do apologize. I'll never get that job on the Beeb. I didn't stick to time. I do apologize. But hopefully you found this session useful. I've enjoyed it. I've got to be honest. I do enjoy doing these kind of sessions. Do let me know what you've done with it. So maybe come back to this video and type in a couple of points of your action plans that you are now going to take as a result of watching this video, even if it's to book a tax call, right? Even if it's not with us, it's some other accountant, that's fine. But as long as you're going to take some action, do list those action points, because I really would like to know. But until next session, thank you ever so much for joining me today. It's been an absolute pleasure. Enjoy the rest of your weekend. Make sure that you wait until you book your holiday away in the UK until the 15th of July, because you don't want to be paying too much VAT. And make sure that you buy property, you save tax, and you make sure you have a nice time with your family. Many thanks. My name is Simon Misiewicz from Optimise Accountants. I'll see you again all very soon.